Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Everybody's been talking about Bitcoin. It's been making huge moves up and down. Have you been trading Bitcoin?
I trade a lot. I trade a lot of things, Jim, but I haven't traded Bitcoin. I trade the futures market, so I do like the exchange-traded contracts that we have available, but I am in the crowd that have just been watching in awe of what's been happening in the Bitcoin market. I mean, even the front page of the Wall Street Journal this morning had a story titled, "Even Grandma Wants In on the Action." And it really is just that FOMO, that fear of missing out, that people are starting to hear about. You know, you talk to your buddy at, the sports rink one night, and he says, "Oh yeah, I made, $10,000 on Bitcoin yesterday. What did you do?" And you kind of go, "Really? Wow, I'm really missing out on something here." But the old trader axiom that I do love and seems to really fit Bitcoin at this stage is, what the wise man does at the start, the fool does at the end. And, do I know if this is the end or if we're even close to it? I have no idea, and maybe it's still the wise people getting in at this point. But you do get a sense that, maybe the people that shouldn't be losing their money are putting more money into Bitcoin and without really knowing what they're trading. And I mean, since 2011, Bitcoin has had 8 cases where it's dropped 50% or more. And you really have to think about that. I mean, as investors or portfolio managers, you really have to know your risk. And when the moves happen as quickly as they do, we've seen, Bitcoin just the other night traded as high as 11,400 and then was down at 8,500 very, very quickly. So that's very hard to quantify that sort of risk. So it's been something that I've shied away from. I think there's a lot of other things to trade that I understand a little better than the Bitcoin market. But there's people making money out there doing it, and I'll leave it to them.
Of course, you're just one Russian hacker away from losing your fortune.
That's the other side of the risks that I just can't even begin to quantify in Bitcoin. You hear stories of, certain hacks and millions goes missing. But again, one of the benefits or perceived benefits of Bitcoin is the anonymity of it, and you just don't know where it is. So when it goes missing, and you're stuck.
I've also heard horror stories about people accidentally checking their hard drive and the code numbers that are connected to their Bitcoin account.
I've heard that as well. I mean, it would be devastating to have to know that you've, thrown away what could now be millions of dollars, depending on how old the hard drive is, that you just threw away because it was a hunk of technology junk that you were clearing out of your office or your desk drawer, and again, knowing that there's nothing you can do about it. There's nobody you can go to and say, "Hey, I'm Joe Schmo here, and I promise I bought these things here and there, and please give them back to me." That just doesn't happen. So there's definitely some pitfalls to some of the perceived benefits of Bitcoin.
You mentioned in our last interview that the CME would be bringing out a Bitcoin futures contract. Has that happened yet, and what do you think of it?
Yeah, the CME is working towards listing a futures contract. It will be a 5 Bitcoin futures contract, so a decent size contract right now, not too big, not too small. Again, it will get bigger if Bitcoin continues to go higher. I guess firstly, they haven't listed it yet. It's scheduled for release around mid-December, so that is coming up very quickly. I am very interested to see how it will be received. I mean, the CME lists hundreds of contracts that they think are a good idea, but they just never get any trading traction behind them. Now, given all the hype and popularity of Bitcoin, I doubt that the Bitcoin futures contract would come to market and not have anybody trade it. But more importantly is, how is it going to be traded? And as I just mentioned, huge swings in the price of Bitcoin. So the futures market has what we call stops or even limits on it, or circuit breaker limits, where we're going to see the price, be stopped if it has too big of a fluctuation. And the CME usually uses a 7%, a 13%, and then a hard stop for the day at 20%. So you can see where if there was a big move, the CME would just halt the futures trading contract. So if you were long or short, you can't get out of your position until it comes back to trading the next day. And again, you'd be in a case where, if it's moved 20% or more by the time it opens or closes, again, you're halted at a limit move. So there's some more risk given the volatility, but the CME prides themselves on being more of a de-risking exchange. They want, producers of goods to be able to de-risk in the commodity markets. And they've established that track record, and they believe that they can dampen the volatility of the Bitcoin because you can have somebody who's now long and short of Bitcoin. As of now, it's mostly, you buy into Bitcoin or you're not in Bitcoin, so you can be long or on the side, where a futures contract always has to have a buyer and a seller. So it does bring an ease to trading Bitcoin. There's millions of commodity accounts around the world, so more people will have easy access, quicker access as far as being in the market, out of the market. And if you're able to be long or short, maybe that does help create a better market, a more transparent market, and a market that then becomes more fairly priced and less volatile. So I think it could be a good thing. I wouldn't say it legitimizes Bitcoin in any way, shape, or form that some people are talking about. I will definitely be watching it when it first comes to start trading. I'm not going to jump in and try and be one of the first people trading the instrument. Again, there's just risks with new things coming out like that, and especially risks with something that has price fluctuations in the size that Bitcoin does. So I'm interested to see how it comes to market. But again, with Bitcoin in general, I think I'll be watching it for a little while.
We'll have more with Drew Zimmerman right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, all the attention has been on Bitcoin, but what about other markets such as crude oil?
Yeah, the crude oil market has been on a hell of a run as well. We've moved from $42, the low that we've had this summer, traded to a high of 59 recently. So a big move higher in the crude market. A lot of this has been on the expectation of what OPEC was going to be doing at their meeting today. We had them meet today in Vienna, and they did decide to extend their production cuts through the end of 2018. That was what the market had sort of been pricing in. So it was touch and go if the market would be disappointed with a shorter time extension, but we did get what we wanted. However, I'm starting to look at the crude market now, being at the high 50 mark and saying, did we price all of the good things into oil there? At this level, we really have started to see U.S. shale production come back online. For the last several weeks, we've seen U.S. oil production hit record highs. They've been exporting more oil. They've been importing less oil. So our inventory levels haven't changed as dramatically as you think they might have. And it is those inventory levels in the U.S. that really drive prices when we get them every Wednesday, so every midweek. But the price action in oil today was very interesting for me because it really was sort of accumulation of all that we were looking for in the OPEC deal. And that's the Saudis with the outside help of the Russians really being the two big producers. And when they agree to something, the market has to listen. They produce close to 20 million barrels a day, so a lot of production from those two countries. But again, we kind of had everything that we wanted, and crude oil prices were flat on the day. We didn't see them go up any further. So I'm really looking at the crude market now saying, I think everything good that can be priced into the market maybe is priced into the market, and this psychology of all the buyers wanting to get long of crude oil for XYZ reasons may already be in the market. We've seen a huge speculative long position built up in the crude market, the longest that we've seen in the oil futures. So if you see all these buyers already in on the long side, we've gotten maybe all the good news we're going to get, and we could see, with prices being as high as they are, much more motivation for U.S. production to come online. Maybe we start to see prices roll over again. So I'm cautiously on the bearish side of crude oil. And again, given the positioning risk, I think that if we started to roll over a little bit here, we could see a fairly sharp rollover. But again, that's the way that I'm looking at the market. I'm tending to maybe fade the consensus view of, oil prices will continue to go higher as backed by OPEC. So we'll have to wait and see what we get.
Will you look for more of a confirmation that this could be the end of the move higher?
Yes. I always come up with the idea of what could play out, but I will always look for a confirmation of sorts, whether that's price action, positioning, sometimes momentum indicators. I will look at some more technical stuff for confirmations. For this market, today was in itself almost a bit of a confirmation. When you can have what should be bullish news coming into a market that's been in a bullish trend, and it just can't get any bullish price action out of it, a lot of the time that does tend to be a bearish signal. So it's not the very top of the market here. We have had a few down days. I would likely like to see some of the price action follow through on the downside tomorrow, but I'm definitely looking at, again, getting some bullish action or getting some bullish news and not seeing bullish action come to fruition as the possibility that we could have run out of steam to the upside.
Well, the stock market has continually been making new highs, so do you take that same sort of thinking and apply it to the stock market?
I think you can. I think when you look at the trading action that we've seen this week alone, when it was first sort of announced on Tuesday that a few key Republican senators would likely vote yes on the tax bill going through the Senate, the stock market, the S&P jumped up 20 points on the day. We had more positive news about the Senate tax bill today, and you saw the S&P was up as much as 30 points, holding up about 20 points now as we're nearing the close. So again, you can say, are we seeing the accumulation of all the good things being built into the stock market rally? We each time are always looking for what will drive stocks higher. In the earlier part of the year, it was earnings. Earnings were really going to drive growth, and now it's tax reform. Tax reform will really drive growth. So it's a matter of trying to say, are we pricing in all the good things to the extent in which we are way overpriced? And there's always different ways that people will look at that, different ratios. But at the same time, that gives us a leg higher, and then we tend to consolidate. I don't see that same sort of all the good news being priced in as a reason for a direct sell-off in the stock market. I would look more towards a different catalyst that would cause the stock market to roll over. If people own stocks, I think they're happier to just hang on to stocks if they're just going to continue to move higher or go sideways. So I wouldn't quite take that same mindset from the crude market and apply it to the stock market.
We'll have more with Drew Zimmerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, if you're looking for a catalyst in the stock market, what would you be looking for?
If I was looking for a catalyst to turn the market lower, outside of the geopolitical risk aspect, I mean, obviously with everything going on in North Korea, the continued testing of ICBMs, although this week that didn't seem to bother the stock market at all. I still think the bigger reason for a turn in the stock market will come from the bond market or from interest rates moving higher. I think that is going to be one of the main determinants of a more fundamental, more lasting reason, not just one of these buy the dip opportunities that we seem to get presented with in the S&P when a single scary event or quick little shock comes out, but a bigger reason for the stock market to really roll over with some sustained pressure would be much higher interest rates.
If you're looking at the interest rate market, is that a move that would be caused by the Fed or market conditions?
I think we could see a bond market that is really moved quickly from a confluence of those factors. So we've got the Fed moving up the short end of the interest rate curve. We're looking for another rate hike in December. The Fed's looking for another 3 quarter-point interest rate hikes in 2018. The market's saying, yeah, we don't know that we'd give you credit for raising rates that many times. But then we also have, the longer-term trend in interest rates. Over the past year, we've kind of seen lows around 2% on the U.S. 10 years. and highs around 2.6, 2.65. That key area could be breaking, on the upside of rates, a 30-year bull market in bonds, so a bear market in interest rates. And if we were to see something like that break, then there's a whole, market fulfilling, sort of self-fulfilling aspect that we could see come to the rates. So, well, some of it may be instigated by the Fed and may already be being instigated with the number of rate hikes we've had already. The Fed may continue, but again, they would continue in what I would call a more gradual, or to use their language, a gradual pace, where the market could take it up at a much more rapid pace than anybody is expecting. And again, it's not a gradual increase in rates that will give us a shock. I think it would be a move to the upper end of, say, the last year, and then maybe coinciding with a Fed rate hike, or in between Fed rate hikes, the market gives us a shocking move in interest rates where we could really see interest rates move higher. And I think it's that sort of surprise action that people don't see coming that could be a bigger catalyst for other markets as well.
What other implications would an interest rate move have?
I see interest rates being very important across the board of the assets that I trade. So the U.S. dollar, especially as you look at U.S. interest rates versus other interest rates in other countries around the world. So I think rising rates in the U.S. continue to give a bid to the U.S. dollar, give the U.S. dollar some strength. And with the U.S. dollar going higher and interest rates going higher, I think you see continued pressure on precious metals. Gold in particular, I watch closely. If you look at it with the 10-year rate now, or the 10-year bond, without having to do an inverse, it's been a very similar chart pattern, and that is because of a lack of inflation. I mean, everybody tracks real rates versus gold more than bonds, but again, without much inflation, the bond is a very usable chart pattern to get that view. So if we see a stronger U.S. dollar and a stronger interest rate environment, then you see a lot of headwinds for the gold market. There is still geopolitical risk and other, risk bids that can come into gold. But again, for me, a fundamental move and weight on top of gold would be real rates and the U.S. dollar moving against it.
If the U.S. dollar is going up, is that bad news for the Canadian dollar?
I think it is. I always try and explain to my clients that the Canadian dollar is important to us, and that's about it. As much as we think what happens in Canada is the main determinant of what happens to our Canadian dollar, and it definitely does have an impact. The big moves in Canada happen when the U.S. dollar moves. So if the U.S. dollar is going higher, the Canadian dollar will go lower. And if things are good within Canada, Canada may outperform on the crosses, but it's not going to be able to hold up over time against a rising U.S. dollar. So right now I'm looking at Canada. We're right near the lows of the end of October at around 77.5 cents. I think, again, coming back to the interest rate market, the interest rate differential really working against Canada here, and some U.S. dollar pressure as well. I think the October lows are likely to be taken out and see Canada move lower. And from earlier in the interview here, I also think oil could be near priced for perfection near the high end of the 50 range. If it starts to roll over, that's another leg to kind of come out from underneath the Canadian dollar. So technically, I think there's room for a fallback here or a break of 77.5, and I think there's several fundamental reasons to back that move up.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. You're listening to HoweStreet.com radio. You can find us on Twitter at HoweStreet. Questions for the show or our guests can be emailed to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.